Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, December 20th, 2017. Let's take a quick look at what's hot and what's not. This is gold. We'll start out here. This is just a 15-minute chart. Gold's back again at that 120 resistance level. I highlighted that recently. You can see a big gap right here that it filled. It tested that gap once, the top of the gap. It backfilled it already. Tested the top of the gap, which is around 120, pulled back, and it's challenging that level again. We did have divergence at that first high. Hasn't been much of a correction yet. This gold's been pretty resilient. The pullback was more so in time than in price. But with that being said, you know, that's that's a level that we may or may not take out here. I have some concerns with what the charts on the futures look like as well. Now, if we do punch through there, this would be my next target here, 120.75, and you might even want to target the bottom of that gap right there, about 120.45. There's a couple reactions, so let's just say those are the next two targets or the next target zone. Looks like we're pushing up right now as I speak up through there. But let's take a look at the futures. By the way, before I move off this chart, the posture right now in the MACD is bullish with it trading above the zero line. You can see it's acted as, and I use this indicator on just about all time frames. When the signal line, the 9 EMA, the white line is above or below zero, the trend is bullish or bearish. So you can see how well it's worked. I mean, just amazing. On the last couple months here, you can see how many times it comes and it tests that level, it acts as support, but once it breaks below, that tells you, hey, we might be looking at a bearish trend now. And so it did. It captured the bulk of that down move, went back, gave you a little whipsaw signal there to the upside, but for the most part, stayed bearish all this time right here throughout that downtrend, and then went signaled a bullish trend right there, and it's captured that uptrend, and you can see here two successful back tests so far of that zero line. So mixed signals. You do have that recent divergent high, but it didn't play out for so much. Much of a correction shows you that right now the bid is pretty resilient in gold. But again, that divergence still may yet play out. And keep in mind, this is just an extension so far of those existing divergences. So gold right now has made a marginal new high. It can push up. It can maybe possibly go up to any or all these levels and still have a divergent high. Because I can say this, if you want to continue with stick with this swing trade right now, if it gets there, we have a divergent high. That's a pretty formidable resistance level. You might consider, again, depends on your time frame. If you're an active trader, consider booking some profits. Longer term traders might want to hold on to it. So there's gold on the 60-minute chart, and the daily. Again, I pointed out that 120 level before, roughly 120, and it's pretty significant resistance. And then if we do punch through it, again, we'll also have the back test of this trend line here, and that was a significant trend line. Once gold gap down below it, we had a pretty swift and pretty powerful sell-off there. So we may back test that trend line from below, and that would roughly coincide with those targets or resistance levels here on the 50-minute charts. Let's look at the futures real quick. This is GC, these are gold futures, and you can see we have this rising wedge pattern here. So we broke down. The breakdown didn't really have much of a sell-off, but what we had is a kickback rally. We've been back testing that trend line. The divergences are still very much in place. So that's why I have the concerns. And as I shared before, this is my uppermost target right now for this run before a decent correction. That's 1273.58, give or take. And you could add a line here at this reaction. Let's do that now. Let me just put that on my chart because sometimes you see these reaction highs can often act as resistance levels. So we'll call that 120, 1271.50-ish, somewhere in there. So then so I guess the point I'm trying to make here is the upside right now is limited. The risk to reward is not very attractive. If you're already long, certainly you want to continue to ride this trend, let it ride. But we're getting to the point here. And if these divergences stay intact, that's a pretty significant resistance level. So the upside is minimal before you get a pretty decent pullback, is my expectation here, at least at this time in gold. Here's GDX, just again for the more active traders. This is only a 15-minute time frame. You can see we're challenging the previous reaction highs right here. We had a few attempts there on this 15-minute chart to get through this 2232-ish level. You can also see it acted as a support back here, support until it was broken, then resistance. So it's certainly a significant level. Again, that's around 2232. GDX is whippy, so you can give a little bit of margin of error to the support and resistance levels because it's such a volatile ETF. But let's see what we have here. If we do punch through that level, obviously if gold continues higher to those next targets I just showed you, we'll probably see GDX take that out. But keep in mind we have potential negative divergences right now forming. You can see it here on this 15-minute chart. So any pop over that level will be a divergent high. Possible that we burn through those divergences if we make it all the way up here to this next target around 2272. I'm sorry, 2277, but we'll just have to watch this one. Oops, didn't start. Here's GDX on a 60-minute chart. Again, you can see a pretty formidable resistance zone right here with all these reactions back here. So the top of that zone is about 2232, and that's again where we're pushing out right now. And if it pops up there, you can see the next target or decent resistance level here is 2284-ish. But again, there's a lot of overhead supply right here. We had this consolidation zone that went on for about a month or so. So there's quite a bit of resistance overhead on GDX at this point in time. So it might be a little bit of tough sledding to get on through this level. But ultimately, if we do and we power above that zone right there, that would obviously be bullish. And finally, the daily chart. This is more significant for longer term swing traders or trend traders. Here's that potential bullish pennant that I mentioned the other day. We had that very impulsive move about a week or two ago, and we've consolidated here, and we have now broken to the upside of that pennant. And as I covered the other day, this would be the projected target. You just basically take the distance of the flagpole, the sharp move leading up to the pennant formation, and add that to the lowest point of the pennant just before it breaks out. And that brings you right up to that 2315 target I have up here. So this is the bullish case on gold. If it powers, or the miners that is, if they power on through those divergences, and they're going to need gold to get them there, of course. Gold's going to have to continue to rally or at least hold its own. Sometimes I've seen gold take off first, the miners play a game of catch up while gold consolidates. So that's one scenario. But if you see gold reverse and those 60-minute divergences start to play out, very unlikely you're going to see GDX make it all the way up here to 2315. From where we're at right now, 2230, that would be a rally of about another almost 4%, 3.8%. Okay, I had a question or a request for an update on in the trading room on UGAS, the 3-time long natural gas ETN. Can't really render a chart opinion today. I've checked at least one other chart source, charting service, and they're all reflecting this crazy. It's a 10-to-1 reverse split. You can just look at the price and tell that's what happened. I didn't have to look it up. Every now and then especially these leverage ETFs will do reverse splits, and they will adjust for that tomorrow. You'll see the prices will be adjusted for the split. But when you look at the charts right now with that candle way up here, and this was my 60-minute chart. It's just you can't really render a chart opinion. So in which case we have to go to the charts of natural gas futures. Here's natural gas futures, symbol NG. Not looking so hot. When I did the update this morning or gave my opinion on nat gas, I said this 265 level was a support level. You can see a few reactions there. We danced on it for a little bit, but now we're below that level. So nat gas futures, there was still a divergent low here. The bullish case is not completely over yet, but and we are back testing that trend line. So we need to see this hold. If we go on and we take out these lows, these previous lows, especially if these divergences are burned through, I think we're going down the 250 level. I'll show you a chart, a longer term chart on that gas. That's a solid support level if we get down to 250. Okay, this is nat gas. This is a daily time frame, daily chart going back at least a couple of years here. And you can see right here, there's that 250 level, very well defined. Have a lot of reactions at that level. You can see the reactions. I'll circle those here. And so that seems like a significant support level. Here's a reaction low we're flirting with. We recently punched below it, came back up. This is an end of day chart, so this is not reflective as of today's move yet. This chart will be updated at the end of the day. The futures I just showed you, those were live. So this is what I'm looking for. If we come on down, we undercut those lows. If we can't reverse soon here in natural gas, this is the next natural target here around 250. At that point, we may be oversold. Love to see an oversold reading. Last time we were oversold on that gas was right here. You can see that huge rally. Don't underestimate. This is log scaling here. That is a big rally right there, down from about around current levels all the way up to about the 340 or so level. Go back in time, the previous oversold reading before that was down here at the lows on 2016, and that was a monster rally. Nat gas prices, what is that? Looks like a triple maybe in nat gas prices. So that's what I'll be looking for. And if the intraday charts 15, 30 minute, 60-minute charts confirm, that would be a nice place to go long for a potential longer term swing trade. The trade I posted the other day in the trading room and on the front page, I covered in videos, the UGAS or nat gas futures. That was just a quick pop. And we got that. And that was a nice pop. I think about 18 or 15 or 18% on UGAS in just one day. But we'll watch and see what happens here on nat gas. Another potential swing trading op that stands out right now is corn. This is corn futures. Now, again, this is an end-of-day chart, so this will be updated as of the close today. But we can see yesterday corn closed right here. I have a support line around 346 or so. You can see there was a big gap right there. Big gap up. We backfilled that gap. The top of that gap right there, or this level here, should act as support. There's also a downtrend line here that we're back testing as well. So you have dual or intersecting support levels right there. And more importantly, we have on this daily time frame here, we had a divergent low right here at this point. And last time, you got to go back a while here. Okay, let's draw this out. So we had divergence back here. You can see that divergent low and the subsequent rally that followed right there. So again, bullish divergence on the daily time frame. Looks like the initial rally and a back test. So this one may have some legs as far as a swing trade. And let's take a look if you prefer to trade ETNs versus futures. Then you want to look at this one. Symbol is corn, C-O-R-N. So you can see there. You can also see the divergent low right here. Positive divergence. These charts look a little different because, again, we were just looking at futures. But we had a divergent low back here on corn, and that was, I guess, an official trade. Looks like we hit that first target and reversed right at it, that $20 level, pulled back, and we haven't had bullish divergence on the daily time frame until now. So let's look for, we start to see prices move up. It would be nice to see some type of bullish reversal candlestick pattern. But either way, let's see if these divergences are confirmed soon. We'll watch the charts of corn futures, and this may be put on as an official trade idea. I'm seeing several of the ag commodities starting to firm up. You can see a divergent low back here as well, and all the rallies. There's another divergent low, and there's a rally. So, pretty simple but effective trading style, especially to capture these trends. Even though the primary trend has been down, there's been a lot of profitable, long side trading ops if you wait patiently for these oversold bear market rallies, whatever you want to call them. And eventually, I look at the charts, the long-term charts. These commodities are going to be the way to go within the next year or two, undoubtedly. The stock market is very frothy. We all know that. It was one of the longest bull markets in the history of the financial markets. Its valuations are pretty extreme. And at some point, and there's a ton of liquidity sloshing around the system, at some point when that money starts to leave stocks, it's going to find a home. And the natural homes are going to be bonds, gold, commodities, things like this. So I think we'll see excellent swing trading, trend trading, and investing ops over the next year or so here in commodities. So this is one I'm watching right now. And a couple others. I'll just stick on the ETF theme for now. DBA, that's Power Shares Agricultural Fund ETF. Nice divergent low. We had divergent lows here. You can see them all marked out. Divergent low number one. Boom, nice rally. And again, divergence in itself is not a buy signal. It's nice when you can have a trend line or something else to give you an indication there was a breakout there. There was a descending price channel, falling price channel, divergent low number two. Boom. nice rally. Divergent low number 3, we didn't really have a trend line. We might have on the 60-minute chart, but either way, we had a divergent low right there, and that played out for a rally as well. Same story here. You can see there's a steep decline. So you can look at that on an intraday chart, probably find a trend line there on a 15, 60-minute, 30-minute chart. But on the daily time frame, it looks good because you can see the PPO turning up here. That means that divergence will soon be confirmed on any more upside. And I don't see this one stopping till at least that $19 level. That would be my minimum target, first target. And again, there is the potential, as I said, we can put a downtrend line here. This downtrend line gets taken out. That would most likely mean we're looking at a more lasting trend reversal in DBA, and maybe longer term traders could tuck this one away with the appropriate stops in place, and a lot of potential upside there in the coming months to years. But again, first things first, and let's just see if this continues to firm up. And I may add some of these soon as official trades, and if so, I'll give you what I think are some good price targets. Joe is the coffee ETN. JO is a symbol. You can see divergent low. We had a divergent low back here. It looks like we had two targets. T1 was hit, T2. There was a potential third target, but looks like I never made that an official target. And that was off that last divergent low. Coffee can really run when it takes off. I like to trade coffee, long and short. You can see up here, island top reversal pattern. That worked out perfect. And again, you can trade these any security, long or short, no matter what the trend is. The primary trend, as a swing trader, we capture these smaller trends, the bullish and bearish trends. And again, nice divergent low here, oversold. That's another reason to be interested in coffee here. I'll have to confirm this with the charts on the futures. But as of now, looks like there's a little upside. We're going to hit some resistance here, not too far ahead. So I don't know. But I'll have to look at this and I'll get back to you whether I think there's a trading up there or not. And so I'll maybe add that as an official trade. NIB, one more. This was an official trade on the site. We went long somewhere here, hit that first target, hit the second target perfectly in reverse. That's why a lot of these targets. That's why I have final targets, where I don't think there's really any more an attractive risk reward ratio or any reason to stay long. So we hit that one, and look at the reversal. Very sharp reversal. Gave back what would have been all the gains if anybody hadn't taken profits there at T2. And I think I still need to update this one. I made a mention in the trading room and probably on the front page. I know when that was hit, but I have to put up an official post and then archive that, move that to the completed trades. But either way, we've now fallen back to, I've had this support line here around 2287. There's some reactions there, and we're very oversold. We hit oversold readings for the first time since back here. Well, this was actually when crossed down below it. So at that bottom there, that divergent low, you can see the PPO curling up. So maybe a bounce trade here. I'm not as crazy about NIB, but I do think it's probably a little more upside here. And let's look at a couple others. Okay, those were obviously long trade ideas. This is a couple just shorts stand out. I had price alerts triggered today on MCD. This is McDonald's. This is a daily chart. So what you have is you have this primary uptrend line in blue here. Quite a few reactions, and I think it's safe to say we're going to head down to at least this trend line. We'll visit this, probably get a reaction when we get there, and ultimately we might work our way down here to this any of these horizontal lines. You can see above the primary uptrend, we had a smaller uptrend line, and that really took the form of a rising wedge pattern, bearish rising wedge. You can see negative divergences, which is why I think McDonald's is topped out for the time being. 60-minute chart. And when we zoom in, you can see that rising wedge pattern pretty clear, and we're just now cracking below that trend line. But what's giving me pause at this moment is we have support here around 171.93, and then also a little more support there around 170.45. But if and when those levels go, and I do think they will, you can see the negative divergence here on the 60-minute. I think McDonald's is headed down here at about 163.47. That would be my first target. So that would be a drop of about 5%. And this is a relatively low beta trade, so you're not going to get smoked on it if it goes against you. Anything can happen, but McDonald's isn't. You're not chances of waking up to a 10% gap against your position in McDonald's is slim to none, in my opinion. Overstock. Sorry for the pause there. I thought I'd pause the video. Overstock. We had a very nice profitable swing trade on this recently. It's probably setting up here for the next swing trade. You can see this is just a 15-minute chart. Again, you got to be nimble with this one. It moves fast in both directions, but here's a pretty well-defined trend line. You can replicate this on your chart. Not sure if I'll add this as an official trade at this time around, although it recently was. There's your trend line 15-minute chart. There's your divergent high, negative divergence, pretty steep divergence. That trend indicator is still bullish for now. You can see it's been bullish since it crossed all the way back right here and told you the trend was bullish. So if that white line crosses a 9 EMA, goes down below this the zero line, which will most likely happen if prices break below. There's your first target right there, 65.52. From where we're at right now, that's a drop of about 12% or so. So there's one to keep an eye on. And then finally, let's just look at the broad markets real quick. Take a look at QQQ. 60-minute chart. I've been living in the world of the 60-minute charts. I did do a video recently, taking a look at the longer term charts, daily and weekly time frames. But here's that 60-minute chart I've been covering quite a bit. There's your, most recent divergent high. We've been diverging and going back all the way here on this move up. And I don't know if I've modified these trend lines, but either way, this is a trend line I'm watching right here, what I call a minor trend line, and that broke today. In fact, today we saw some pretty interesting price action. We saw the Qs gap up, pretty nice gap. You can see that yellow line is a close. So we gapped up, rallied just at the open shortly, and that was about we were up about 0.4%, and then boom, very violent reversal. This is a 1-minute chart, so they sold that gap hard, and that keeps this near-term. Well, we can't say the near-term trend is bearish just yet, but again, we have this divergent high, and if we start to build some downside momentum, I know seasonality sort of favors the bulls this time of year, but the charts are the charts, and if you trade off seasonality alone, um, sometimes that can go against you. And when the stock market does go against seasonality, those are usually some of the biggest moves. So I just keep that in mind. Anyway, so charts are indicating downside on the Qs. The trend has been resilient. That's why I'm not adding these on as official short trades yet. But for those of you interested, there it is. There's the levels. And what we're watching, we had this high back here. We had highs here. We broke out. So this was a breakout to new highs, bullish. And as I said the other day, we're probably going to come back in, at least back test those highs. That's about 156.65. And I gave you, I believe, the other day, I gave you my bullish scenario for the bulls. Come in and back test that, see that level hold. Most back tests, they tend to undercut. They like to wash out, anybody that tries to step in and buy there. So don't be surprised if it undercuts briefly. But if that holds, on a daily basis, daily closing basis, and rallies up, that's the bullish case. Take out the new highs. However, the bearish case is if this fails, if we come back in and we move impulsively and solidly below 156.65, then what that means is this breakout was a false breakout, aka bull trap, and then we may go on to hit those targets that I've been holding for a while here on the 60-minute chart. For those of you not familiar, if you're just catching up, 150-120 would be my swing target on the Qs. Reaction there, and possibly if things get ugly, come on all the way down to 149.21. So we'll see. So far, like I said, divergent high. The risk reward is not very good right now, in my opinion, despite the trend. I remain near-term bearish on QQQ. All right, we'll just wrap it up here for your futures traders. It's NQ. These are the March contracts, NASDAQ futures, 645. 64.45. I'm sorry. That's the level to watch. There's that same level. That recent breakout on QQQ. You can see we failed there, pulled back, tried it again, failed, and then finally broke out. And like most breakouts, you see the impulsive buying once we broke out. However, they're fading that rally, and they're fading it pretty aggressive. We had this big move down the other day. Bulls bought it up. That was met with more selling. So it looks like people are trying to get out of the queues for some reason. So again, watch it. This is an important battleground here. There's a minor trend line to watch. I'm not crazy about it because this is only the third reaction if we get a reaction here. But again, these are levels to watch and trade off of. And I think that's it. If anything else stands out, I'll put it in the trading room or front page post. But as of now, those are the what I'm watching today is some near term trading ops. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.